welcome back. Financial statements, what are they? And what do they say about a business? Dyna Ung explains all. So today I'm joined by Dyna Ung. Thank you so much for joining us today.
Thank you for having me.
Principal of Tactics Accountants and Advisors.
Yeah.
Today we're going to be talking about how to read financial statements. So Dyna, what is a financial statement?
Yep, it's the collective name for a number of reports. Generally includes the profit and loss, the balance sheet and cash flow statement. The profit and loss shows how well the business performed during that 12-month period, for example. The balance sheet is a snapshot of the assets and liabilities of the business and the owner's equity at a specific date, generally 30th of June.
Okay, so how do these differ from, say, a bank statement?
Yeah, a financial report summarises all the information, whereas a bank statement is a transaction report. It just basically shows what's money's coming in and out. It doesn't summarise anything, so it's less useful for making decisions.
Okay, so how are financial statements produced? Where do they come from?
Okay. It's basically an amalgamation of information, financial information from various sources, like it'd be cash transactions through a cash book, it could be bank transactions, it could be transactions generated by the accountant, and the bookkeepers generally put that information together, and then the accountants generally do the end of year adjustments for things like depreciation, tax calculations and profit distributions.
Okay, so on to profit and loss statement. What is the significance of a profit and loss statement?
Yep, the profit and loss statement shows how well the business performed during the say, for example, the last 12 months. It's a really good tool for working out what your profit margins are. Whether you made a profit. A break-even analysis is something that you can use. Can do with the profit and loss statement. Also, allocation of resources, like you might want to increase sales staff and reduce admin staff or something like that, and also allows you comparison between different years to see how well you perform compared with the last year.
So what's the difference between gross profit and net profit?
Gross profit is your sales less your cost of goods sold. And a simple example would be if my business was selling pens and I sold a pen for $10 and the pen cost me $5, then my gross profit is $5 or 50%.
Okay.
Net profit includes other expenses like overheads, and so if I had other expenses of $2, then my net profit would be 30% or $3.
Okay. What does cost of goods sold mean?
It includes a number of indirect expenses associated with making the product ready for sale. It includes things like materials, production wages, and anything that to bring the product in a state ready for sale.
So what's the difference between a fixed cost and a variable cost?
Okay, a fixed cost doesn't get influenced by the level output, and common examples are rent, interest and insurance. Variable costs change with the level of sales. They include materials, the shipping costs and wages, selling expenses.
So when is tax payable on a net profit?
Tax is payable on an annual basis, generally after lodging your tax return. The ATO determines each year when you have to lodge your tax return, and that depends on the size of your business and your lodgement history. If you're late, they tend to make you lodge a bit earlier. And you pay tax on your profit depending on your marginal tax rates.
Okay, so what can a business do with its net profit?
Okay, depending on the structure of the business, for example, a sole trader or a partnership can pay tax on its profits at its marginal tax rate. After that, it can do whatever it wants with it. Generally, people reinvest to grow the business. Some just take it for living expenses and take holidays and things like that.
Okay. So what does it mean if there is a net loss?
If there's a net loss, then the business is probably in a little bit of trouble in that it generated less income than its expenses. And in the short term, it might create a few little issues, but in the long term, it's not sustainable. You want to at least break even or be profitable.
Okay. And on to balance sheets now. What's the significance of a balance sheet?
Balance sheet basically lists all the assets, liabilities, and also the owner's equity. From that, you can determine whether the business has sufficient funds to pay its debts in the short term or long term.
Okay. Well, what is the difference between an asset and a liability?
An asset is something of value to the business. Liabilities are on the other side. It's what the business owes to other people, like banks, if it's borrowed money from family and friends, or creditors is another example.
Okay. So if we could talk a bit more about assets, what is a current asset?
Current assets are basically short-term assets, usually things that get converted into cash fairly quickly, like within 12 months. To monetary value.
And what's a non-current asset?
Yep. Non-current assets are those assets that can't be easily converted into cash or have a long-term value, like plant and equipment, like a car, for example. Mm-hmm. That's a non-current asset. And buildings, goodwill are all non-current assets.
Okay. And on the flip side, you'd have current and non-current liabilities.
Yeah.
So what happens if a business has more liabilities than assets?
Yep. It probably indicates that it's in a bit of trouble. It's made a loss in the past. That's the only way sort of that liabilities can be greater than assets. And you'd want to rectify that quickly by looking at ways to reduce costs or improve sales.
Okay, so let's say a business has more total assets than total liabilities, but they have more current liabilities than current assets. What kind of issues does this indicate?
Yep, that indicates that it's doing well, but it has more assets that are locked away that it can't access. So it has more debts that are falling due within the next 3 months. Or 12 months, depending on what your definition of current assets is. Mm-hmm. You'd want to liquidate some long-term assets to make sure you've got enough to cover your short-term.
Okay. And if a business is finding difficulties in completing financial statements, who should you go to get some assistance?
It's important for an owner to understand what's in the financial statements because it's a snapshot of what's happened. Mm-hmm. The accountant or whoever's prepared it would be the best person to advise you on that. Failing that, you can go to get help from the Business Enterprise Centre. Even the ATO can help you in some ways.
Okay, excellent. Some great information from Dyna there. So thank you for your time, Dyna. We really appreciate it.
Not a problem.
For more details on any of the stories from this episode, as well as access to a selection of free resources from Business Bites, including videos and podcasts, please visit businessbites.org.au.